Gillette India Limited, flat revenue and a rising volume of profits, the paradox of a near monopoly. A unique market leader in the premium grooming market, subsidiary of Procter & Gamble, benefiting from global R&D achievements. Four flagship brands, extensive dominance in every vertical. Two business segments, grooming leads all the way, both in revenue and in profits. An inspiring trajectory of a rising return on equity, a consistent capital allocation efficiency on a growth path, rising operational profits at the base of the success story. Profit growth reflects on preserving all gains of productivity. Profitability scaling new heights year after year, rising earnings per share, helping hold back the price earning multiple. Managing external funds predominantly through trade credit and other current liabilities. Over a half of assets funded by equity, which has been growing, strong liquidity, and healthy financial fundamentals. Exceptional cash generation year after year, facilitating smooth operations across years. High promoter stake by the global holding company, stable and strong. Trust of FIIs evident in steady improvement in their holding over last 5 quarters in particular. A muted and disappointing revenue growth, a major setback for Gillette. Over last 3 years, a minuscule growth of 0.3% per annum, while the year-on-year growth for FY26 is an impressive 7.6%. It has actually suffered a fall from the 10.5% year-on-year growth achieved in FY25. A trend of rising ad spend over years is a matter of concern on a flat revenue growth. Material costs have a major say in margins, which have been pushed up with every fall in material costs during last 3 years in particular. In a situation of input inflation could choke profits as an imminent risk factor. Internal accruals are hardly visible in capital investment programs. Surprisingly, no major capex programs implemented in recent years. Exceptional dividend payout, ruling out any significant rise in equity for plowback. The aggregate dividend for last 6 years has been with an average of over 100%, quite a strange occurrence for a debt-free company like Gillette. Growth opportunities quite significant. Premiumization offers growth avenues as evident in FY26. Better realization from premium products with no sizable volume increase lifts the size of revenue. Expanding into tier 2 cities and rural segments is quite a promising proposition. Trust of institutional investors, FPIs in particular, is quite evident in their holdings over time. The price appreciation achieved through a 5-year CAGR is a mere 5.5%. That's quite a concern. Lifetime peak at rupees 11,500 is a very promising benchmark. Price at its current level being 40% away from peak is an inspiring target. Achieving volume increase from successful business strategies should guide Gillette towards this end. Quite a rich valuation, risky as it leaves a very thin margin of safety. Much of future growth is already priced in. Further, thin volume might make both entry and exit quite costly. The price times the book value is still quite high. Price earning growth ratio in excess of 1 makes it not a preferable proposition in a normal textbook case. All three parameters in a descending trajectory over last 5 quarters still sense bearishness persisting. Potential risk might scale elevated levels due to an already rich valuation. A strong parentage, access to global technology, and unique monopoly power, quite an overwhelming position of strength, likely to overcome its recent flat revenue trend with its planned growth strategy. Operating leverage and control over cost components put Gillette in a relatively safer zone. All things considered, Gillette can be a stock worth a scan. Hope you found this video on Gillette India Limited to your liking. I am Vittal Prabhu presenting the fortnightly video on Stock Learning Simplified. You can access quality videos at our info card, and we are highly obliged and remain thankful for your valuable time and kind interest. This video is for purposes of information and education only. This is not meant to be a recommendation to buy, sell or hold securities. Wherever relevant, please seek advice of a competent professional before taking action of any kind.